Our featured guest on the close says you can have your cake and eat it too in this equity market. Charlie Bobrinskoy is vice chairman and director of research at Ariel Investments. Ariel's flagship $2.3 billion Ariel fund is in the top 14% of funds in its class over the last year, beating the S&P and the Dow as well. Welcome to the close on Street Smart, Charlie. You know, have your cake and eat it too. You're talking about the shift, which you have, been on the show recommending in the past into large cap quality stocks, right?
That's right. We thought large cap quality was cheap 6 months ago. It stayed cheap. But it's finally starting to work, and we're seeing large cap quality outperform.
And why have your cake and eat it too? Because you are more protected against downside risk, because you get some income from the dividends. I mean, is that the story?
Yeah, usually there's a real trade-off between risk and reward. Usually if you're going to have a safer stock, a safer sector of the market, you're going to give up upside. But now we think that part of the market, these high-quality companies, are actually cheaper, and so we think you can actually outperform while having protection if things get rocky.
Charlie, I mean, aren't you a little worried about the market outlook here? I mean, I can't remember whether it was Adam earlier in the week or last week, had kind of put together a list of some of the concerns. We're worried about Asia, China specifically slowing down growth. We've got the U.S. fiscal situation here. And then, of course, you've got Europe. I mean, doesn't that all, add it all up, bode poorly for kind of the market outlook here?
You know, I'm smiling because the reason it doesn't is because all of those things are very well understood. If there was something that you were talking about, Carol, where people didn't understand what was going on, then I think we'd have a problem.
Yeah, but I don't even think you look at Europe, Charlie. I don't even think they know what's going on. It feels like the story changes from day to day about what's going to happen, what's not going to happen. I mean, do you really feel like all the cards are on the table at this point?
I really do. I think people at this point know there's going to be a restructuring of the Greek debt. I think that is a widely anticipated event. I think that's why you have a lot of European bank bonds that are trading at pretty wide spreads, and the bank stocks haven't done very well. You'll notice I didn't say that the big banks have performed very well. They haven't, because of concerns over what's happening in Europe. So I think all of these concerns are well understood, and that's why the market's relatively cheap. The S&P is only trading at 13 times forward earnings, which is bottom quartile of multiple, despite very low interest rates. So we think we got a great upside opportunity on valuation here.
As far as surprises, there's an interesting story in the Journal yesterday where Nobel Prize-winning economist Bob Mundell said the end of QE2 could create a spike in the value of the dollar against the euro. That could bring deflation into this economy, and we could be right back where we were at the end of 2008. I was talking with Komal Srikumar from TCW this morning. He thinks that's going to be the case as well, which is why he factors in another recession in the third quarter, or at least serious shrinkage. Are you concerned about that?
I just love the fact that there's all this well-publicized negativity around. If everybody was so positive and saying we were only going straight up, I'd be worried. But the fact is that there is still a lot of fear in the market. There's still people who haven't forgotten 2008. People are talking about a double dip all the time, and that's why these stocks remain very cheap. The high-quality companies, many of them are trading at less than 12 times earnings. J&J is earning a higher dividend yield than you can get on 10-year bonds, which is just about unprecedented. So we've got very good values because of all the reasons you just stated.
Charlie, let me get back to you. I mean, when we start to see some of these earnings, we've gotten through earnings season. I mean, something like AMAT. Are you comfortable, though, about the corporate profit picture at this point?
We've had a nice series of quarters with companies beating expectations. The analyst community, we think, is still anchoring the numbers that are too low. People aren't taking into account the efficiencies, the costs that people have taken out. They're also not taking into account international growth. Many of the companies that we hold have more than 50% of the business outside the U.S. The short answer is that profits have been beating on average. About 70% of companies are still beating the averages, and so we think that trend's going to continue.
Charlie, we're going to leave it there. I really appreciate your time this afternoon. Charlie Bobrinskoy joining us from Ariel.